You better get ready. In today's video, we're going to break down number 1, the impact of the current geopolitical crisis on markets. Number 2, the plays that are working right now. And finally, down below. Now, if you appreciate all the work that goes into making a video like this, the only thing I ask in return is that you hit that like button. And also, don't forget to subscribe. When you do those things, YouTube pushes the video out to more folks, and it helps us out tremendously. And as always, if you're the one taking the ultimate risk, you gotta be the one doing the ultimate risk. Always do your own due diligence and all ideas presented. Okay, so market context first. So right now, we are in the beginning of a big escalation in the Middle East. I know you've never heard that one before, but Charlie, how do these types of conflicts affect markets? Well, they result in short but sharp market shocks with little lasting impact beyond a few weeks. You look at some of the most recent conflicts, the Israel-Hamas war, the Russian invasion of Ukraine, the airstrikes on Syrian air bases will have very minimal impact from a stock market perspective and a short recovery time overall. Even in situations where the US was directly involved at sending troops abroad and or on the ground like the start of the Iraq war, well, the one-year performance was still very green, almost 30% up. So even if the US gets directly involved, well, there's still not much historical precedence for stocks doing poorly other than the original blow to markets. The original shock and awe is what freaks everybody out and tells them, okay, we need to sell first, ask questions later. But it turns out that tends to be near where markets bottom, and then they tend to go back up over the long run. Now, what tends to do well during these conflicts though? What specific areas can we exploit and make money off of? Well, when Israel first hit Iran last week on Thursday night, we prepared our members by alerting 2 specifically and strategically chosen call options. The first were the 25 strike VIX calls expiring July 2nd, and the second were the $30 strike UCO calls expiring July 18th. Why did we choose these? Well, VIX spikes when fear and uncertainty break out massively as people rush to hedge. To the VIX index whoop and UCO, and oil ETF spikes when oil prices go up, and oil prices were rallying massively as a result of the strikes. Now you look at the VIX calls we alerted, they opened around 74 cents and ran to $160 at highs on Friday, and the alerted UCO calls opened at roughly 73 and ran to $230 at highs, sold off, and then started climbing at the end of the Friday session. Very, very nice trading opportunities, and I continue to believe that they're setting up for much, much higher rallies over the coming weeks. And the reason I'm bringing them to you today is because I believe you will see UCO and the lovely VIX skyrocket on a rolling basis over the next weeks before this conflict is done and behind us. UCO is going to have more staying power, in my opinion, as the oil supply chain issues will stick around longer than the fear hedging will, which tends to be more of a come and go situation. But with UCO, the upside potential drivers I told the Discord about are the following quote. Number 1, escalating geopolitical risk. Any further Israeli or Iranian military action, notably near the Strait, could amplify supply disruptions and push oil sharply higher. Number 2, tight supply dynamics, lower pipeline and US field output together with OPEC plus discipline underpin a bullish foundation even before the geopolitical premium started getting factored in there. And then number 3, summer liquidity conditions. Thin seasonal trading volumes tend to exacerbate price swings, magnifying moves in both oil and leverage ETFs. And then of course, leverage exposure. UCO's 2x structure means a 10% move in oil can translate to 20% moves or more in daily swings in UCO, offering rapid gains for well-timed calls. Now, I believe oil will continue its overall upward climb. Going to follow a pump and dump overall uptrend, but I believe it's going to have an overall uphill climb as the coming weeks play out. It seemed like we're already trading unreasonably low in the previous couple of weeks anyways, and now we have this big geopolitical risk. Well, I think UCO is setting up very, very nicely, and that's why these UCO calls, even though they are already up a lot since our original alert price, are still set up for even more in my opinion. And by the way, if you would like to join our Discord to get all of our options, alerts, and other features that we have for you, make sure to go ahead and do that with that first link down below. So let's talk about APLD. So the lovely APLD is now in its much awaited breathing cycle, and I would say brace for more. Over and over again, expect this to happen. It's still up more than 2x from our original call out price, but it can settle down even lower, and that is fine. These things breathe. They can't just go straight up forever. They need to breathe, settle at a higher support, and build conviction by rebounding from those higher support levels. In my view, the short-term great price is anything below $10. But of course, our long-term outlook over the next 3 years is that this is going to go much higher, but it is going to ebb and flow in that process, and you got to respect that. Now, if you remember, APLD recently signed this big 15-year lease with CoreWeave, who is a NVIDIA-backed powerhouse. And after they announced this, APLD stock skyrocketed even faster. And it also came out that CoreWeave sold their entire stake a few days after the big announcement. Essentially, it looked like CoreWeave pumped APLD stock with their big 15-year leasing deal and then sold out when the stock went up massively. Now, why did they sell? Well, I can only speculate, but I think it's probably because their stake went up hundreds of percentage points in the matter of a couple months, and they can use that capital to enrich their own business instead of having to dump more shares on the market via an offering. Seems like a no-brainer to me. Unfortunately, you got to know that this data center business model is extremely capital. You got to invest so much capital to make this thing work, and there's only so many different ways you can do that. You can do that by selling the stakes in some companies that you're working with. You can do this with special financing, or you can do this with massive offerings, all of which people aren't going to be happy about. But the truth is that you need capital to make the business model work. That's like the whole reason you go public on the market anyways. But remember folks, this really doesn't have much to do with the CoreWeave and APLD partnership. The 15-year lease literally just signed is enough proof of concept to show that, hey, Corey and Nvidia-backed business is a big believer in APLD's ability to deliver. And honestly, CoreWeave is just one of APLD's many clients. I would put this in the category of a nice buying opportunity, but again, look, I think this is going to sell off a little bit more, at least before this overall cycle goes back to the upside. So keep that in mind and brace for more, okay? Now it's time for the main entree. Now, I'm a big believer that the next 10 plus years is going to be a major global arms race to have the most powerful computing ability possible, because better computational power means better AI, better defense, better economic security, better so on and so forth. Whoever wins this computing race is going to win the superpower race. But a major key component is the rare earth materials on which this new wave of technology depends. Now take a look at MP Materials, ticker symbol MP. MP Materials specializes in mining and processing rare earth materials, primarily at their flagship Mountain Pass mine, located in California. And here's why that's such a big deal. These rare earth elements are absolutely crucial for high-tech industries. We're talking data servers, batteries, chip components, wind turbines, smartphones, advanced defense technology, and pretty much everything else you can think of that we need for the booming AI and computing sectors. The bigger picture here is that MP Materials owns and operates the only rare earth mining and processing facility in the United States. And since the US actually imports 80% plus of its rare earth needs, while China controls around 80% plus of global supply, well, that means that Mountain Pass is vital, absolutely vital for national security. Now, I know you're thinking, Charlie, why not just depend on China for rare earth materials? They can do it way cheaper than California, Charlie. Well, because China can just rug pull us at any. You've got to have an alternative plan, and you've got to be funding that along the way so that if they do decide to do that, well, we're prepared. Now, Bloomberg ran this article just a few days ago on the 12th. It says, Trump moles using defense powers to fund rare earth projects. And if you look at the caption below the picture, it says what? It says, bags of rare earth concentrates sit for transport at an MP Materials mine in Mountain Pass, California. The Bloomberg article goes on to say, officials are discussing using the Defense Production Act to tap financing, loans, and other means for rare earths element-related projects, including mining, processing, and other downstream technologies to bolster the US's capability to build a domestic supply chain. The people said MP Materials Corp., the sole domestic producer of rare earths, would be a prime beneficiary. Deputy Defense Secretary Steve Feinberg is working to line up funding for the People familiar with that matter said the Nevada-based mineral processor has received millions in funding from the Defense Department. Now listen very closely to this one. Quote, Defense Secretary Pete Just in a congressional hearing this week said that MP Materials is a great example of a place where we can partner with industry and that Feinberg is focused on sourcing rare earth supply. This is the only company in the US that has this kind of rare earth mineral material that they need. And so that means it's uniquely positioned to benefit from policies aimed at securing domestic supply chains. Think tax incentives, government funding, and supportive legislation, all designed to counter geopolitical risks from China. Looking ahead, MP has some serious potential catalysts on the horizon. Number one, expansion of processing capabilities. Right now, MP mines rare earth elements and partially processes them, but still sends some materials abroad for final refinement. However, MP is aggressively moving towards full vertical integration, meaning they'll soon handle the complete refining process domestically, significantly boosting profitability. There's also the computing and AI boom. Supercomputers use a ton of rare earth magnets in their components, and demand is skyrocketing as giants ramp up purchasing orders to make data centers and supercomputing chips. Well, MP Materials will be increasingly the go-to supplier in North America. And then you got defense contracts. The US military relies heavily on rare earth materials for advanced weaponry and defense systems, and MP is positioned perfectly to benefit from increased defense spending and strategic stockpiling. And then of course you got the overall government support with bipartisan support to bolster domestic production and reduce reliance on China. Expect additional funding, tax breaks, and favorable policies. So the bottom line here, folks, while MP Materials isn't just a mining company, it's a strategic asset in America's technological and increasingly geopolitical future. If you are bullish on tech, AI, or national security, this is one you got to put atop your radar. We also just alerted very specific MP calls with a very specific timeline in mind, and you can find those in the options idea section of the Discord. Anyways, that caps off today's video. Let us know what your favorite plays are down below. Let us know how you are playing the geopolitical situation in the comment section down below as well.